In this week's Stockscores Market Minutes, we'll look at the question of how long should you hang on to a losing trade. I'll then do my regular weekly market analysis. We will do a market scan in search of opportunity and look at the day trade of the week on CVET. All right, so how long should you hang on to a loser? One of the great challenges we have is to know the difference between a stock that still has potential and a stock that should be sold. We know that it's important to limit the size of our losses because big losses can crush a portfolio. But where is that point where we need to take the loss? Not all trades are going to work right away, plain and simple. Pullbacks are normal and healthy in the longer term upward trend. And so we have to differentiate between a healthy pullback and a breakdown that will lead to lower prices. Now, what I like to do is use the last inflection point to define support and wait for a close below it. Until then, be patient. So let's take a look at a chart as an example, and this is the chart of Air Canada. On the weekly, it made a good breakout through resistance back there, which was a pretty good sign to buy it. Now at that point, we have to decide where is our support? Where is that line in the sand? And it's here at the green line, which was the last inflection point low. Now notice over the ensuing 4 weeks, this is a weekly chart, over the next 4 weeks, the stock moved back, it hit that support zone, but it never closed below it. And then the stock went into the upward trend and ended up being a pretty solid trade. All right, let's get into this week's market analysis, starting us off with the S&P 500 long-term chart. And you can see that the market is breaking to new highs. It is a market in a bull trend, and therefore we have to be bullish with this trade. On the shorter term time frame, you can also see that we are in that bullish trend, and although it feels like maybe it's getting a little overextended, there is no sign of weakness, and therefore stay on the bullish side of the market in the short term as well. On the Russell 2000, which is the US small cap stocks, we don't have that bullish trend. We are trading underneath this resistance zone, and until we can break out through it, I would be a little bit careful to be too enthusiastic. However, I am seeing more and more opportunities coming from that small cap sector, so I feel like a breakout soon is likely. On to the Canadian markets, and just like the US, the Canadian markets are reaching to new highs, and with that break to new highs, we have a bullish signal and therefore remain optimistic about the Canadian market. Looking at the short-term chart, you can see that bullish trend. We are due for a pullback. We've had numerous up days in a row. We will get a pullback soon, but that does not mean that the bullish trend is over. For now, remain bullish in the short term as well. And the TSX Venture, which is the real dog in the North American markets, because the speculative investor really isn't doing all that well, this market is testing its lows from late 2018. I advise a good deal of caution with stocks listed on the TSX Venture. On to the currency market, and you can see here the US dollar has continued to stay in that upward trend, so I remain optimistic about the US dollar. On the Canadian dollar side, you can see that we are in a sideways trading pattern, and until we can break out through this resistance level, I wouldn't get too excited, but the good news is we are building rising bottoms, and that is a sign that optimism is slowly building, and therefore I have a good feeling about the Canadian dollar long term, but in the short term, I don't see any reason to be overly optimistic. On to interest rates, and you can see that the treasuries have been in that slow slide back to the upward trend line. That's actually healthy. I think interest rates are going to just be stable near term as the bond market got a little overextended to the upside, and now it's pulling back to that trend line. And so I would say we should see a bounce, and we actually saw a little bit of a bounce last week in the treasuries, which means interest rates are stable. On to commodities, and you can see that gold had that breakdown last week. It hasn't had any follow through. It is trying to stabilize. So it's something where there's maybe still some potential, but I would not be too enthusiastic about gold until this market can break out of the flag pattern that it is in. Now oil looks a little better because you can see that that downward trend line has now been broken, not with much enthusiasm. There's not a lot of volume, not a lot of strong price action there. However, if we can continue to move up from here, then the oil market and the oil stock should start to do better. And I'm already seeing some energy names start to show better charts. And so I think this is an area where you really want to watch because there's some good opportunity here. This market's been really beat down and it's starting to show some signs of life again. And here on the fear chart, you can see that we are at some real lows. I've purposely shown the real long-term chart just to demonstrate that when there are corrections in the market, you get this VXX really getting quite hot. Well, we don't have that. We had a little bit of that in the summer, late or early fall. But right now, there's just no sign of fear, and therefore I don't worry too much about a correction until this starts to pick up. So my ratings then on US stocks and Canadian stocks, bullish on both time frames. Gold, neutral, long-term, bearish, short-term. Oil, neutral, long-term, bullish, short-term. The uptrend continues for stocks on a wave of doubt, as uptrends often have. Until the upward trend is broken, simply believe in the bull. Gold stabilizing, but it's still fighting that short-term pessimism. The opinion of oil continues to improve and oil stocks starting to present good opportunities. And as I said, fear is low. All right, so let's do a quick market scan on Stockscores. I do this more as a demonstration of the tools that I use to find trading opportunities. The Stockscores Market Scan tool is available to any member of Stockscores, and you can go to the Stockscores website to learn more about that. So let's jump over to the site now, and we're going to run a scan this week called Abnormal Breaks US. This particular scan looks for stocks making abnormal price moves in the US market, and it found for us 31 stocks that did that on Friday. I then want to view the charts of those stocks, and I do them in two ways. One, I can look at what's called a slideshow view, or what you see here, which is a gallery view where I can see a lot of charts per page. And so the first stock you see, Vermilion, had a pretty abnormal move last week with some good volume, and I think it's probably headed up toward the 150 zone. So that's a pretty good candidate. It's still below this long-term downward trend line, so I don't see it as a real strong pick. I would rate it 6 out of 10. JCPenney is one that keeps coming up in my scans, and I think it has some potential. We've seen some strength in other department stores, and JCPenney's chart shows a stock that is breaking that downward trend line, starting to build rising bottoms, and it had some volume come in last week as well. So if you're looking for a real bottom fish, maybe a throw of caution into the wind, then I would say that this is something worth considering because it is starting to show some life. I would rate this a 6 out of 10 as well. Now, we're not going to go through every one of these pages of charts. I want to just give you a sense of how I analyze charts. These ones that I'm zipping past here don't really have anything that I like to see. I can teach you what to look for. That's part of the Stockscores education that we offer. Here's a chart that I think looks pretty solid. You can see this line of resistance at $14, and we are breaking through it with some good volume this past week. I like this chart. I would actually rate this a 7 out of 10. And RadNet, another one, building also an ascending triangle pattern with bottoms rising towards flat resistance at $16 and breaking out through it this week with very strong volume. I would rate this a 7 out of 10 as well. All right, well, let's get into the day trade of the week. I do this more as educational purposes. We can't obviously do these trades anymore. These are trades that I found using my algorithms through the week, and they are presented to my active live subscribers where people can watch my trading screen through the day, and you can learn more about that at the Stockscores website. So the day trade of the week was this one, CVET, which made its break right where my cursor is when it broke from a little ascending triangle pattern, much like we saw on those daily charts of RDNT. This broke from that same kind of pattern, but in this case, it's a 2-minute chart, and the trade was triggered. The algorithm calls for a purchase of 1,240 shares if you wanted to take $100 of risk. Now, that sounds like about $17,126 in capital, but with margin, because you can margin day trades 3 to 1, it only requires $5,750 of capital, and that is an 11.5 RR gain, or an $1,150 gain for that $100 of risk. That represents a lovely 20% return for a one-day hold. All right, well, that has been the Stockscores Market Minutes for November 18th, 2019. I hope that you've enjoyed it. If so, click on the like button, hit the subscribe button, tell your friends about it, and most importantly, trade well.